We are what we repeatedly do. Excellence then is not an act, but a habit. Will Durant and my friends repeatedly do each and every day, 10 to 15 minutes. That's all we ask. You will soon find yourself mastering trading. And again, I tell folks, don't worry about how long it takes. Once you master the charts, you will make up for all the time you ever spent. Let's jump into these things. Stocks and gold are up. Bitcoin and bonds are down. Let's jump into the S&P 500. As we look at the S&P 500, it's up 0.53% for the day. We can see, let's pay attention here down at the bottom of the screen. You see pretty much, let me enlarge this a little bit for us. Play this out some so you can see it a little better. And you can see that we had pretty much a doji in the morning and a doji in the afternoon. We did end up, now these are Heikin Ashi candlesticks, up a little over 0.5%. But where does that leave us for this week? We can see the latest 2-day candle didn't reach a lower low. This is the first day of the latest 2-day candle. Will finish drawing tomorrow. And you might say, Tom, if the market was up today 0.53%, why is the 2-day candle down? Because, my friends, it is what? It is a Heikin Ashi candlestick. And the Heikin Ashi close is the high, open, low, and close of that day, or that period. The Heikin Ashi open is the Heikin Ashi open of the prior day minus the Heikin Ashi close of the prior day divided by 2. And the Heikin Ashi high is the max of the high, the Heikin Ashi open, or the Heikin Ashi close. The low is the minimum of the low, the Heikin Ashi low, or the Heikin Ashi close. What does that do for us? And I want to make sure I said, as far as the close of the Heikin Ashi, it's the open, high, low, and close divided by 4. So it gives us the average pace of price movement. That's why, even though it was an up day, it's showing a down candle because of all the downward pressure and the average pace being down, although you can see it did not hit a lower low than that prior 2-day candle. Look at the weekly. It is a strong down candle. We're already at average volume. We have 2 days left of price movement and volume gathering. So we'll continue to keep our eye on things. Where are you when it comes to our grid? Well, we look at our trade execution summary grid, and of course, that is in your show notes each and every day. If you're a subscriber at chartingwealth.com, it is free. You go there, sign up. We email you our video each and every day along with the show notes. And in those show notes is this grid. So you don't have to worry about writing all these numbers down. That list is never spammed, never shared. What do we see? We're still, as we were yesterday, 65% probability of continued down movement. We see support at the 553 level. That is our strict entry point. We see resistance at the 570.68 level. We see the aggressive entry at the 558.29 point. Now, as we are looking at things, we are currently at 558.87 as things closed. Our backtest accuracy on a move that we project to be somewhere around $29 is a 60% accuracy on the aggressive, a 70% accuracy on the strict. And that is the same as it was yesterday. The only thing that's really changed is our support, resistance, aggressive, and strict entry levels. So again, we still have lots of weight pushing this market down. What about the NASDAQ 100? It was down, it was up more, 1.13%. You can see up in the morning, and it's hard to tell if it was up any more in the afternoon. It might have pulled back a little bit. We look at where we are on the half day. We're up to about half volume. This green doesn't mean that this was all selling volume and this is buying volume. No, it just means it opened higher than the prior close. When you see red, it means it opened lower than the prior close. That's all that means. Look at the big, strong down candle. We're already over average volume this week, 2 days left. Lots of downward pressure. How does that compare to where we were yesterday? We're still Directional probability, 60% down. We look at where our support is at 471.79. As markets close today, 476.92. Our resistance is at 486.83. Our aggressive entry point is right about where we are now. Our strict entry point is at 471.79. You say, Tom, how do we use that? Well, if you're already in and you're simply continuing to write it down, you're not doing an aggressive or strict entry unless you're adding to your position. And again, I always give you the caveats. We're not a stock calling service. We're an education firm. I want you to practice trade this stuff. Prove it to yourself that what you are doing works. Please do that. Learn what you're doing. Learn how to read these charts, how to practice trade. That is through practice trading. Now, the aggressive entry is our back test summary shows us that it's about 55% accurate. The back test accuracy on the strict is at 65%. So again, not as strong as the back test accuracy on the S&P. Now let's move from stocks to bonds. Bonds are down today 0.60%. Yesterday we were at 55% short directional probability. We're still the same. Our entry points and support are as follows. Support, and it's the same as the aggressive entry point, is at 89.78. The resistance is at 90.87. Our strict entry point is at 89.78. And as I said, that's about where we are as the market closed. We expect about a 3%, 3.5% or so. I'm sorry, a $3.60 move. Trying to keep all my percentages straight. Our backtest accuracy is 50 on the aggressive, 60 on the strict. Now, where are we when we look at gold? Take a look at gold. It has been sliding. You know, we had it top out all the way back on the 18th of February, and then we saw again hitting right at the same levels that next week, beginning the 24th of February. That was the 18th and the 24th. Those are Mondays. We always start the week, well, not always on a Monday. That was actually a Tuesday was the 18th because we had Martin Luther King holiday. And then we saw a doji the following week. That's the week beginning March 3rd. This week, we have a green spinning top, a little bitty wick on the bottom, and you can see where things plugged down for 4 days. That would have been 26th, 27th, then the 28th, and the 3rd of the 28th of February, 3rd of March. And then things started moving up. Where does that lead us? You can see for the last 2 days, gold bumping up. We still find ourselves with gold going long on that. We have been long the last couple of days, but still only at about 55%. Why? Because, again, gold has been ambivalent over these last few weeks. It is trying to track up more. It's probably why, well, that is why we're at 50% long, but that's awfully close to just half and half. The support is at 269.15, resistance 271.23. Our aggressive entry point is at the $270.47. Strict entry, $271.23. Expect about a $10 move. Again, the aggressive is at about 50%. The strict is at about 60%. It's so close, to half of one, half of another, a flip of the coin. It is hard to make any kind of call on gold right now. Yes, it's tracking up some this week. It hasn't crashed yet. Is it going to go higher? Don't have a lot of assurance that it is. We're just 5% off even. So that is where we are with gold. Now, Bitcoin is even more sort of happenstance. It has been going down. We're about 50% short Bitcoin. Bitcoin is down just a little bit for the day, 0.13%. Saw Bitcoin hammer down strong on Monday and then sort of tracking up a little bit since then. Yes, once Bitcoin hit its highs, we saw back on the 16th of December, then again on the 21st of January, and then a green spinning top on the week beginning the 26th of January, and then things have just slowly but surely, well, cartwheeling a couple of times really down strongly. And where does that leave us? Well, we got about a 50% probability, according to our calculations, of continued short. Support is at 23.13. We're currently at 23.45. Resistance 23.97. Aggressive entry is at 23.40, which is about where we are now. Strict at 23.13. Projected down movement about $4.06. And again, as we've been reporting lately, this is on the 5+ day movement, not the 20-day that we were looking at a week and a half or so ago. We've switched back to our 5-day movement, and that's on all of these charts. And where are we when it comes to the backtest accuracy? Again, not good on the aggressive. That's 40%. On the strict, about 50%. So a coin toss when it comes to Bitcoin. So where are our decent moves? Well, in a continued down move on the S&P and the NASDAQ 100. When we look at the others, again, they're just over 50% on Bitcoin, on gold, and on 20-year bonds. That is where we are as we close the day. We always love to hear from you. Don't hesitate to reach out to us, cw@chartingwealth.com. God bless, my friends. All the best from Charting Wealth.